Sound money is the challenge and opportunity of our lifetime. That's our thesis, our reason for being here at Sound Money. But what does that mean? What is sound money? What's unsound money? So in this video, I'm going to focus on the first half of that thesis. What is the challenge? What is unsound money? And what is that problem in the world today? And the conclusion is that our current monetary system is unsound because it's not based on principles, and it is the cause of so many of our environmental, social, and governance problems today. We need a sound and principled monetary system like Bitcoin or potentially something else to solve the world's biggest problems. And what you're going to learn from this video is what is unsound money? Why is our current monetary system unsound? And why is this the biggest challenge in the 2020s? So an unsound monetary system is just one where there is very little constraint on the quantity of new money. And it's critical here to distinguish the difference between quantity of money and wealth. These are not the same things. As a quick example, the Federal Reserve or the central bank in the country which you reside, they can easily increase the quantity of new money in the economy or the world. And that's quite obvious. If you just look at the example of 2020, central banks dramatically increased the quantity of new money, but that doesn't necessarily impact wealth. I mean, it will impact wealth over time, but a dramatic increase in the quantity of dollars in the world does not dramatically increase or decrease the wealth in the world, the actual assets, property, equities, and all that wealth that we store over time. Our current monetary system is unsound because there is very little constraint on the monetary and fiscal authorities in their attempts to increase money. It's quite obvious that we've reached this outcome if you look at ultra low interest rates and elevated debt levels, which are at some of their most extreme since the Second World War. And how did we get to this point? Well, because there's clearly very little restraint on politicians. So whenever they're faced by any problems, whether it be social, economic, political, financial, it's much easier for them to lower interest rates and encourage people to take on more debt rather than actually trying to deal with the root problem that they're faced with. They just create this money. It kind of works in the short term to create this money and spend it wherever the problem might sit. So they're just papering over the cracks of that problem, but they're not actually dealing with the problem itself. And they're, of course, ignoring the long-term consequences. They'd argue that the consequences of creating new money is just CPI inflation. And the conclusion of what I'm telling you here is that is nonsense. There are numerous conclusions, numerous implications to unsound money, to creating all of this money. And it's my thesis here that it's the cause of some of the world's biggest problems. These relationships are just a little bit abstracted that sometimes it's difficult to see. So before you think that I'm just a nutty person drawing this big conclusion, let me provide you with a few tangible examples. First, inequality. So low interest rates allow this massive growth in debt, all that capital gets created and it goes somewhere. And over the last 10 to 20 years, it's been quite obvious that that money has flooded into financial markets. And you can see the outcome that prices of most financial assets are at some of their highest levels they've ever been. The valuation on a lot of these assets is particularly high, even with the correction that we've seen in the last 6 months. Still, from a historical perspective, valuations on most asset markets, properties and equities are particularly high. Now that outcome benefits the people who've held those assets. If you held a property, if you've held equities over the last 20 years, you've benefited, and that's great. So there's nothing particularly wrong with that specific outcome. But for the people who haven't held those assets, they of course don't experience the same benefit. And particularly people who are young and trying to just get onto the savings ladder. They're trying to buy a house, they're trying to save for their future, or they're trying to save for retirement or their children's education. It's a challenge to conduct that saving. So in other words, unsound money has very unequal consequences in the world today. And it's no surprise to me that we live in some of history's most unequal societies, particularly along generational lines. And it's important to note here, I'm not saying there's anything particularly wrong with inequality itself. I think inequality will always exist. I'm not some sort of socialist or communist who thinks that we should strive for equality. The problem is just here we have a mechanism at the center of the economy, which is the monetary and financial system, which I think is exacerbating inequality and making a challenge for us in society. And what's problematic is that governments see this problem, but they think they're going to solve it through redistributive policies. And my argument here is that they're not going to have much success until they focus on the monetary system. And that's something that they tend to always ignore. You'd very rarely see politicians wanting higher interest rates or wanting lower debt levels. So, second example, environmental damage. It's obvious when policymakers lower interest rates, they encourage us to take on more debt, and what they want us to do is consume more things because that's allegedly going to boost the economy. So consume more cars, more houses, more holidays, more clothes, more food. And there's nothing particularly wrong, of course, with having any of those items. I'm not telling people that they shouldn't have what they want, but if we're consuming all of these items, those are scarce resources. And if we're buying it with capital that we wouldn't otherwise have had, are we surprised that has an impact on the environment? With capital that we wouldn't otherwise have had, and we're consuming all of these goods and services, that consumes these scarce resources. So with interest rates at their record lows and debt levels at their record highs, it's no surprise to me that we see extreme environmental damage in the 2020s. Now, once again, there's all sorts of causes to environmental damage that aren't just the monetary system. But it's clear to me that there must be a linkage here. And it's surprising to me that people don't speak about it more. So the third example is governance. So unsound money with its low interest rates and easy access to debt is particularly advantageous for large institutions because they can use their big balance sheets to access lower and lower interest rates. They're going to get they're going to be at the front of the queue for the lowest interest rates that are available as they continue to fall lower and lower. And this allows large institutions to grow to an even more disproportionate size of the economy. The most obvious example here is governments. Most countries around the world, governments are very large. One statistic to try and assess that is, government spending relative to GDP. I'm showing you here a graph of that in the US. You could measure this in different ways, but governments are large relative to the size of the economy. Another example in the private sector, you could look at the concentration, which is what I'm showing you here for the S&P 500 in the US. The concentration of the largest 5 companies is at some of its highest it's ever been. So it just prove of this point that we are seeing increasing concentration, large companies holding a disproportionate size of the economy. And while there's obviously some positive impact of having larger companies, you can get economies of scale. I think this point only works up to a point. I think there's a strong argument to be made that a number of these large organizations are increasingly inefficient. And government is a very obvious example of this. It doesn't matter which side of the political spectrum you're looking at. I think people are quite frustrated with governments, with politicians in the 2020s. And I think a lot of this is because they've become large, bloated, inefficient, and they're not doing the job as well as they should be if they were smaller and more nimble. And many large companies also have a very strong relationship with regulators, entrenching their powerful positions and being able to hold back competition. So once again, this is a complicated topic, and I'm not saying that the monetary system is the only cause of some of the governance challenges that we face in the 2020s. But the funding available, for me, is clearly a driver of these inefficient and often corrupt governance structures that we deal with today. So my thesis here is that unsound money is the biggest challenge that we face in the 2020s because the overuse of monetary and fiscal policies negatively impacts so many different areas of our lives. And hopefully you can see here from the examples that I'm giving that I'm, not just coming up with some not nutty idea. Yes, these relationships are abstracted between money and the outcomes that we deal with, but there is a method to the madness here. There are clear relationships between money and inequality, money and the environment, between money and the governance structures in which we live today. And also remember that money is half of every transaction that we deal with. So there's no surprise that if we distort money, we have a pervasive impact in the world. And understanding the consequences of our unsound monetary system creates a compelling motivation for interest in sound money assets like Bitcoin that has a specific supply constraint, and therefore it has the potential to be the center of a principled and ethical monetary system. I'm Rob Price. Thanks for watching. If you enjoyed this content, please like and subscribe to see more, and I will see you in the next video.